We begin tonight with the labor market and a new report that shows companies added more workers in May than the prior month, a sign that job growth is recovering from a rough winter. According to payroll processor ADP, the private sector created more than 200,000 jobs, the most in 4 months. And while the number was pretty much in line with expectations, this report is considered a warm-up act, if you will, to Friday's big government jobs report. And it's something investors are watching closely for clues about when the Federal Reserve may start hiking interest rates. Steve Leisman has more.
As the market braces for Friday's big jobs report, two economic data points today giving a mixed picture of the economy. The ADP payroll company showing 201,000 private sector jobs created in May, a bit below expectations and a bit below the 225,000 expectations for the Friday report. Job growth looks to have slowed from the lofty levels earlier this year, but still remains at a strong clip, enough to bring down the unemployment rate.
We were 250 to 300K at the start of the year. Now we're probably 200 to 250K, which is still very solid. At 200 to 250K, that's double the rate you need to absorb the growth in the working age population. So, if we just maintain this rate of growth, by almost every estimate, we will be back to full employment by this time next year.
Meanwhile, a closely watched survey of the service sector coming in a bit below expectations, but still showing growth and a key component indicating strength in services employment. Amid an avalanche of data this week, overall economic reports have come in a bit better than expected. The data is in line with an economy bouncing back from the first quarter's contraction, but not all that convincingly. The latest estimates see first quarter growth contracting by 0.5% and the second quarter rebound at 2.7%. Average the two together, and first half growth is on track for an anemic 1.1% growth level. The Fed will likely need to see economic momentum confirmed heading into the third quarter to have enough confidence to hike rates. For Nightly Business Report, I'm Steve Leisman.